Hello, everyone. So welcome to today's presentation. My name is Jessica Arichali. I'm the Chief Compliance Officer and Chief Legal Officer of Parvis Invest. I want to make it very clear as to the purpose of what we're doing here today. My goal here is to plant a seed. And in planting that seed is going to do two things. The first part is provide clarity. Clarity in regards to how you can use your investments and deploy them in various ways. And the second part is to give you options. Options because the market is very saturated and oftentimes people feel overwhelmed as to what to do. With all that in mind, I want to give you context as to what is going on here today. And the three context markers I want to provide are this. Firstly is that you all can see me, we've hit a critical mass, but I cannot see you all. Thus, if you want to engage with me, please do so via the public chat that you may see off to your right side. The moderator named Sarah will be of use and available to make sure that I can see your questions or concerns, but ideally we're going to address your questions all at the end. The second context marker is that essentially my goal is not to sell you anything. My goal is to educate you all, make you aware of what private markets are, what private investing is, and oftentimes how we can make an exclusive market democratized and available to the masses. And then finally, the last context marker is that we are a publicly traded company. The ticker on the TSXV is PVIS, as you can see in the bottom left-hand corner. If you're interested in purchasing shares, you could do so through there. But first and foremost, I want to make sure that you're aware and essentially open to the opportunities that we're going to discuss, which is private investing explained. So going from there, we're going to progress on to the slides. Here, we're going to discuss why this conversation matters. You're probably looking at me and thinking, what is in front of me? What are these table markers, these various colors? I want to explain to you what net worth is and the differentiating markers in regards to people's net worth distribution. It's very simple. In this table, we see here to the right, we have people with net worth at the 10K mark right here, all the way up to the 1 billion marker. What's the significance of that? This table is showing us where people's net worth lay. These colors have significance. People between the 10K to the 1 million net worth have a great degree of their net worth available to them through their primary residence, as you can see here. Why does that matter? Your primary residence, even though it is an appreciating asset, it will not be the predominant driver of your net worth, especially when you pass that 1 million threshold. However, as we can see with the second bullet here, that wealth is predominantly built through ownership. And the ownership I'm talking about is the public market, in addition to the private market. But most times, people are only aware of what? The public markets. And that's because over the past 20 to 30 years, with the privatization of retirement savings, the use of the public markets become very available. Before we go any further, how many of you in the chat have some sort of stock market investment, whether it's through a Wealthsimple or a Quest trade? I'll take a moment to pause here. Okay, I see. Thank you for those who are engaging with the thumbs up. I really appreciate that. In this context, you're thinking, oh, trading within the stock market is very usable, very user-friendly, and everyone, for the most part, who's financially literate is doing it. But the dilemma here is that this was a recent innovation, especially with the digitization of brokerages. Imagine what you would do before there was a Wealthsimple. Imagine what you would do before there was a Robinhood, a Quest trade. You'd have to go through one of the big banks, go into the banking institution and purchase a stock, which is very intimidating and oftentimes inaccessible. But in this context here, why we're discussing why the private markets matter and why this conversation is significant, when you pass this 1 million threshold, you see where the assets are being distributed. It's entering pensions, IRAs, in addition to mutual funds, fixed income investments, managed assets, business interests. That is where you begin catalyzing your returns. And how do we get from this beginning margin, this 10K to 1 million, from the 1 million to that 1 billion? Because I know there are future billionaires in this room. But before I go too fast, I want to explain why there is a pain point and what Parvis does to solve that, and also its competitors. Similar to Wealthsimple, to the Quest trades, We're making private markets accessible. We're making private markets democratized, such that these blue, light blue, green assets are now available to the public in an easier and more accessible way. So as you can see in this section where this becomes the largest portion of the portfolio, we're opening that pathway. Now moving onwards, I want to discuss this multi-decade shift in the mass markets. Currently, this table we have here has been sourced from JP Morgan Asset Management, their 2026 report on alternative and private market assets. Right now, to the average person, it may be a bunch of mumbo jumbo. But what I want to essentially describe to you here is the change in trend. As you can see, there is a bit of a decline in the number of US companies that are publicly listed. This is not to fearmonger at all, but it's meant to communicate a trend. The trend is that capital is being produced increasingly in the private markets. I want to say that again. It's communicating that private markets are increasingly becoming the predominant vehicle for accruing assets for businesses, real estate, alternative assets to build capital. Now, with this in mind, in the late 70s, very few North Americans had or owned stock. That's because pensions were very, very popularized. So imagine if your retirement was set for you, why are you investing? Your future has been established. But with the shift of retirement from the corporation's responsibility to the individual responsibility, that's where you see that shift towards the private markets, the public markets with the stock exchange. Because now us as civilians are responsible for our retirement and future well-being. But as you can see, with this great opening of the RRSPs and 401ks, if you're in the US, we're now seeing a shift within the private markets, but there was a bit of an issue here. As I go to this visual here, you see during the 2008-2010, you start to see a large increase in private market participation. And this is because we've shifted the laws that went from allowing only, we go backwards, the millionaires to participate in private markets to allowing those who are eligible and non-eligible. Those terms I'll define for you in the next few slides. So to summarize once more, imagine private markets were only for the people from the 1 million net worth upwards to 1 billion. So it explains why their portfolio was so heavily skewed this way, because they recognized that private markets is their hedge against the public markets. You've seen the news. You see the political uproar and the stirring essentially within the political domains. And you're wondering, is everyone invested in the public markets only? And for the most part, when you reach higher levels of net worth or the ultra high net worth individuals, that is not the case. And this is where we're trying to essentially bring Parvis into the conversation. For those who don't know, what are private markets? Private markets are essentially where businesses, institutions, or some form of corporate entity have an offering. Imagine a Tesla before it goes public, or let's say a large condominium you see being built where they've maxed out their public resources. They now go to the private markets, whether it's through individual entities, which are corporations that have funds to provide, or they're people like you and I. In essence, they're asking you, hey, so-and-so, do you have some form of resources you're willing to give to us to support our business endeavor? This is essentially a modern day form of crowdfunding in a more institutionalized and sophisticated manner. I'm going to repeat it again and give an example that's tangible. Imagine someone that has purchased an asset and they're now looking to raise a bit more to capitalize on further endeavors in that same business. Let's give an example of a condo in Toronto. They raised about 70% of the capital, but they need help with that final 30%. They can go to the banks. They've maxed out their own personal capital. They're going to go to the public through an entity like ourselves as the broker and say, hey, Parvis, we need help to fill this gap. Can you essentially assess the quality of the investors that are coming for us, or to us, I should say, and use your tools available to you to assess their credibility, their suitability, and make sure that the funds are legitimate. And that is our role. Now, going forward here, my goal is to help you understand the structure, 2, the process, and 3, the roles. Unlike the public markets, you need essentially an individual to guide you through the process because there's this term known as prospectus exempt. under certain security laws, which allow for these individuals who are coming to you to raise money to protect themselves and also to protect you. Now, many of you probably have heard of the term diversification. You're thinking, Jessica, I know what diversification is. It essentially means not to put all my eggs into one basket. Correct. But for the most part, I presume most of you thought diversification only occurred within the stock market. This is where many people are not aware of the opportunities available to them. The stock market is not your only form of capital gains resource. This is where private market comes into play. This is where business enterprises come into play. And as a result, your basket expands. So by diversifying your portfolio, not with only public stock exchange, but with private market assets, you enable for your portfolio to be strengthened and essentially avoid concentration risk. As many of you can see, we're a bit of a dilemma where the stock market is a bit more volatile. Now imagine if your net worth, and let me not say imagine, let's say when your net worth is above 5 million, because I have to be correct, when. Can you imagine your entire net worth being in the stock exchange and going through the volatile times we're going through currently? It will likely keep you up at night, keep you feeling a bit distressed. And this is why individuals in that higher net worth range don't have all their assets in that one market type. And this is why it leads me to point 2 about avoiding concentration risk. You can't just have your assets only in one type of portfolio asset. And it allows for you to get to point 3, which is market behavior balance. When the markets in the public exchange are volatile, you can lean into the private market, which are more resilient and disciplined. Although the returns may not be 100% of return or 3x or 4x, they essentially act as your hedge against volatility. And that also encapsulates the 4th point about reducing volatility to help smooth the ups and downs. With this now, you also have opportunities for expanding growth because not only is there real estate, private market assets, there's alternatives. You can actually buy assets within music royalties, within dentistry offices, different variant forms of businesses, MFTs, the list goes on. Whatever someone can take and make a business, they can then potentially make an offering on that business and essentially make it available to the public when producing an offering memorandum and going through a broker or the correct term is exempt market dealer. Before I continue, take a quick opportunity to look at potential questions being made in the chat. So with this here, I see an individual saying, will the recording be made available after the session? And yes, it will be. And thank you very much for asking. Now going forward, I want to discuss what alternative assets are and the different kinds that we have available. As you see here, we have an opportunity to invest in private equity, a term that you all may have heard very much and very often. And you're thinking that's only for large corporations to participate in. Beyond private equity, we have real estate. Imagine for many young buyers who are thinking to themselves, I've been priced out of the real estate market. This is a way for you to get within the real estate market without making a large down payment. We also have hedge funds, commodities, and also collectibles. And these are various asset classes that are made available to the public through Parvis to enable you to be a bit less volatile in comparison to the stock exchange at times. So moving forward, I want to make a case for modern private investments. In this essence, private markets have become a cornerstone for resilient investments. And what that means, going back to that initial table that I presented to you all, is by making your basket more diversified, number 1. Number 2, more resilient, and allow you to have a skin in the game in different industries that perhaps you yourself as a whole can manage. For example, if you recognize as an industry that's on the up and coming, but you yourself don't own an enterprise within it, you in essence can invest in a private equity firm that is doing that same sort of business, and as a result, enables you to have a bit of share in the game. Now, through Parvis, we enable you to unlock access to high barrier sectors, which as you can see involves real estate, private equity, alternative assets, and private credit. Imagine things like Klarna Afterpay, where they take funds from their investors and also other banks and entities and loan to other people at a higher interest rate. And essentially you get to participate in that as well. But making sure I don't skim too quickly, through the private markets, you're able to have tangible valuation floors, where it essentially offers you a baseline and a potential upside that although it's not guaranteed, they have historical returns to provide to you. It also de-risks your portfolio as a whole. And also, when investing in real estate, it allows you to also have the upside with the population growth and immigration. So, with one of the questions that came in, the question is, do you have to be an accredited investor? And being mindful of this, I will actually go to my next slide where it will walk you through the three kinds of eligible investors who are able to participate. So in this category, we see here why accreditation matters. When you want to participate in private markets, there are different floors. Imagine this being a pyramid. When you're at the top of the pyramid, let's say a permitted investor where your net worth is above 5 million, you're able to invest in a manner that has no maximums and no concentration limits. You may be wondering, Jessica, what is a maximum and what is a concentration limit? In essence, there are securities laws that help protect these varying classes of investors from harming themselves. So imagine a permitted investor who has more than 5 million in financial assets or 25 million total. They can invest freely, let's say up to 10 million in one asset, and they don't need any particular approvals from an individual like myself who approves trades. But let's say you're on the other side of the spectrum and you're an eligible investor, 75,000 annual income, or with a partner, 125,000 combined income. You get to invest, but there are ifs, ands, and buts. The first if is that, let's say in this theoretical situation on the Parvis shelf, we have a Tesla, we have an Apple, and we have an Amazon. If you're permitted, you can invest as much as you want into the Tesla, Apple, and Amazon. But if you're eligible, you're only allowed to invest 10% of your net financial assets into any one of them. So let's say you have $100,000 net financial assets, which is essentially all the money you've saved, excluding your real estate assets. You can invest 10,000 into Tesla, 10,000 into Apple, and 10,000 into Amazon. Whereas if you're a permitted investor, you can invest as much as you want. Now, the middle tier, which is the accredited investor, and I shouldn't call them a mid tier, it's actually the top tier. The permitted investor is usually the exception. They have $200,000 in annual income, or with their partner, $300,000 combined. Or, once again, these are not ands, or they have 1 million in net financial assets, which means whatever they have saved, excluding their home, and also their other real estate assets is 1 million. They're able to essentially invest as much as they want. With some exception, let's say they're investing about 80% of their portfolio with an issuer, then I may intervene and essentially put a bit of, let's say, room for concern. But even in that example, there is a document called a suitability waiver or a self-directed trade form, in which allows me to say, hey, Jessica, I see your concern, but I still want to proceed with the trade. Before I go any further, I'm going to quickly check the chat once again. I see one individual asking, what are the typical growth potential in alternative investments? There are various kinds of growth potential opportunities. Now I'll go into discussing one example. As you can see on this window here, there's an image showing the investment funds where you see an example of Honey Tree REIT right here. You can also see a few others listed, and they all have different colors, orange, blue, and green. I'm unable to zoom in the screen right now, but if you go onto our website and go onto our investment opportunities, you'll see the different growth potentials they each have. Some are higher risk, where they have growth potential up to 30% plus. The reason for this is that they're a bit more volatile, and also as a result, they have a higher buy-in price. These are usually hotel chains in the, let's say, the Caribbean or abroad, because they're not within perhaps the geographical region of North America, or I shouldn't say North America, both in Canada or the US. They're deemed a higher risk investment, but also they have higher upside. But there are options where they're called Core Plus, where they provide you regular monthly income, steady income. So to summarize, what you'll find on Parvis is an example of income-focused and wealth growth investments, where you're able to use registered funds from your RRSP, FHSA, and your TFSA to invest in these assets. And essentially, where you invest in these assets, they can grow within these registered accounts, and the benefits these registered accounts produce are also afforded to the assets you have within them. And for many individuals, they're probably thinking to themselves, I did not know I could have other things other than stock market products in these registered accounts. But that is not the case. You also have private market assets within them. And this is where the Parvis advantage comes into play. Many of these issuers you see here have their own websites. But once again, it used to be an old boys club where it's if you know, you know. And as a result, if you didn't know this particular corporation existed or issuer existed, you didn't know there's an opportunity to invest in them. And platforms like Parvis essentially bring all these various offers and brings them onto one platform for you to access. Taking pause here, I see one person asking if there's a way to do impact investing within the private market within Parvis. The case here depends on the issuers. Some issuers themselves have more of a triple baseline. So they're not just about profit, but they have other people focused factors. But that is based on their actual offer memorandum and their documents behind the vision for their general issuing or offering as a whole. And this is where you may have to go through the different funds, see their details and what they stand for, and see perhaps if it aligns with your investment needs. Examples could be if you only want to invest in halal products. There's issuers who potentially focus on that, and that is their business focus as a whole. Moving forward beyond this, I want to explain to you who we are and what we do. But before I go too far, I do see there's another question. Yes, I see. Yes, you do need a minimum income level. So with this stage here, the slide we have in front of us is who we are and what we do. I want to be mindful to not inundate you with different securities laws and financial regulations. But the formal title for an entity like Parvis is an exempt market dealer. So if you look online and go to the different provincial regulators, the Ontario Securities Commission, the British Columbia Securities Commission, the AMF, it's French for the Quebec Securities Commission, so on and so forth, they each have securities laws that essentially regulate how we can participate and provide these offerings to you to ensure that no fraudulent behavior is being conducted on our platforms and to ensure that these issuers, such as Basecamp here, which essentially provides spa resort, lets you invest within a spa resort within Banff and the greater Alberta area. We are that broker between you and them. And beyond that, we also, as I previously mentioned, perform independent due diligence to confirm the accuracy and the completeness of these issuers. As you can see on the right image here, Basecamp is one of the issuers on our platform, or previously was an issuer on our platform before they were funded. As you can see, it looks like it's a spa resort. And if you've ever been to Thermia within the Greater Toronto area, that's an example of potentially an entity that wanted to raise money and went to the private markets to seek it. But this is a very popular fund that was on our platform previously. I see a question asking if we need a minimum income. As I previously mentioned, depending on your criteria, if you're an eligible investor, you need a minimum income of $75,000 or join with your spouse around $135,000. And it varies for accredited where you need $200,000 individually or $300,000 with your spouse. Or depending on your net financial assets, which essentially is adding all the things you own and removing the real estate. But right now, I want to walk you all through the user journey. Essentially is what would it look like for you to go on the Parvis platform? If you have your computers with you, which I presume you all do, you can type in Parvis's website domain and go there and essentially see what it looks like to essentially onboard. And I'll walk you through the 4 phases of what it look like to participate on our online platform. The first part is essentially to complete your account, which allows you to identify and ensure that there's no fraudulent behavior such as terrorist activities, in addition to being a politically exposed person, such as if your parents or your family are involved in government. We essentially want to make sure we know you as a customer and make sure there's no conflicts that may impede your ability to adequately participate in an issue and investment. And we're also making sure there's guardrails in place to prevent against anti-money laundering. Once you finalize your profile, you're now able to get to phase 2, which enables you to gain access to the full view of the Parvis dashboard. On the website, before making an account, you can see what the dashboard looks like by clicking investment opportunities. But when you make an account, you're able to see those investment opportunities and the details behind them. And this is where we get into the idea of knowing your product. We're able to take the details, evaluate the investment terms and the risks and the projected returns. These last 2 phases is the area in which most people don't know prior to participating within private markets. And that is the stage of committing and funding. When you're on a Wealthsimple app for your phone right here, for example, you click buy a transaction or buy an asset and it immediately goes through. But the reason why it immediately goes through is because they're publicly traded. For private markets, You first make the request to commit funding to the actual asset, but then you're connected with somebody called a dealing representative. Before I go to phase four, I want to actually explain to you what a dealing representative is. A dealing representative is essentially the individual that before you fully buy the asset, they sit down with you on a call and essentially say, "Hey, so and so, I see you're interested in Basecamp. Let's walk me through your financial history, walk me through your goals, and let's essentially make sure that what you're purchasing is in alignment with those goals." Imagine them as your real estate agent, like when you're looking to rent a property where you don't pay them anything. It's the people in the back end who are paying these dealing representatives to essentially represent their product and put their best foot forward to you. They, in essence, are saying, "I want so and so's business and I want to support them." And they are now the person who essentially answer your questions, ensure your investment align with your goals, and lastly, charge no fee to you. They're that expert that essentially allow for you to make sure your specific risk matches your tolerance and your time horizons. But going backwards, beyond phase three, you then want to prove for the transaction through the DR, the dealing representative, aka that real estate agent, and myself. You're now able to deploy capital and have ongoing access, which means you're able to make either a wire transfer, whether it's a cash transaction, or in the alternative, you use your RSP, TFSA, FHSA, or so on and so forth, whatever account you have available to you to invest. And then you can track your investments on our platform, similar to what you would do for Questrade and also Wealthsimple. Now, bringing things to an end, I want to explain to you the risk very briefly. Similar to publicly traded assets, you have the risk of losing your entire investment. That is part of the game of playing within the private and public markets. But the difference between the public market and the private markets is that, unlike a stock exchange where you can buy it today and sell it tomorrow, private markets need you to commit to a certain time horizon. It varies between different classes or different assets. Some may say you only need to commit your money for 1 year. Some may say you need to commit your funds for 5 to 6 years. Usually it's around that 3 to 4 year range. And this is why it makes it a little bit more illiquid. And this is why there's these regulatory steps in play to protect investors. So they're not investing funds and now being left on the hook when they need those funds in the future. Now, I want to open the stage for questions, but I want to keep it very brief, about 2 to 3 minutes, because I do know we're capped for time. I see there's a question here saying that if there's political officials or individuals working in government, renders them ineligible. I do want to clarify, if you're a political individual or you work in government, you're not rendered ineligible. However, what does occur is that when you're having your profile submitted across the back end, you'll be flagged as a politically exposed person. That just makes us have heightened due diligence on our end to ensure there's no details such as potential conflicts of interest. I see another question in regards to is there a way to invest in the private market without investing in residential real estate? Yes, there is. The reason why there's an emphasis on real estate is very simple. It's an asset in which tends to appreciate, number one. And number two, in addition to that, is one that many people want to invest within beyond their personal real estate property portfolio for their homes, but they don't want to make a large down payment. You can invest in things such as music royalties, businesses. In addition to those businesses, mutual funds as well. If you go through our offer on our website, you can see what's currently available and also what is to come. I'm going to take 1 more minute to see if there's any further questions that come in. Okay, wonderful. So before I let everyone go, I want to provide you an opportunity as to what potentially you could do next as your next step. In essence, I want to make it very clear that you don't have to invest now. I feel as if within the financial space, everyone is focusing on the ultra high net worth clients, the people who are ready to deploy capital right now. But for businesses like Questrade and Wealthsimple and ourselves, we're not only focused on the ultra high net worth, but the people to come. I'm just communicating once again, as I said in the beginning, providing clarity and options. Clarity in regards to what is out there and to know what private markets are. Number two, options. To know that, hey, I've hit the $75,000 mark. I'm eligible to participate, or I'm not at the accredited status mark. I have a bit more wiggle room to now invest in these private market assets. Or if you're a permitted investor, you have no caps at all and are able to waive suitability. And if that's the case for you and ready to deploy those assets, you can make an account. But even if you're not ready to deploy and you want to browse a bit further, you can make an account as well. You will not be called, you will not be reached out to. It just allows you to have greater access to the profiles of the different issuing investors. Before I end the meeting here, I want to give you all a thank you for coming out to support me and also support the business as a whole to learn a bit more about what we have to offer. But I want to make sure we make a clear disclaimer in regards to that this is not financial advice, number one, and that we're an exempt market dealer that have primary regulators, the British Columbia Securities Commission. And as a result, there are certain things that we're allowed to do and we're not allowed to do. And they're further detailed in this slide deck right here, which will be made available to you also within the next 24 hours for you to view and access the resources. But if you have any further questions, you can email or reach out, both via the informational email, or also touch base with our moderator, Sarah, who's on the call as well. But for now, that is it. And I want to say thank you for coming out. And it's a pleasure to speak with you all. Thank you, everybody.